Welcome to this webinar on "12 Steps to Successful Small Business and Medium Enterprise Capital Raising." I think this is a very exciting time for small businesses and medium-sized businesses, but also for accountancy firms to assist your clients on the crowdsource funding journey. So today I promised in our last webinar that we would take you through and show you the crowdsource funding product package that's been developed by ESS BIZTOOLS. So what's included in the product package? We have a procedure control form. We've developed a document called a procedure control form for each of the 24 product packages that are contained within ESS BIZTOOLS. This one is obviously for crowdsource funding, equity raising. It will guide you through the process. Hopefully gives a system for you to approach. In the very beginning, we have some overview material that gives you an understanding of what's been included. And then we have details of the sections that are contained within this particular product package: preparation, marketing and promotional material, quotation and proposal, summary of crowdsource funding overview. The corporate governance concessions really don't apply if you're working with current clients. They finished at the 19th of October when small proprietary companies were able to raise capital in their own right. And then we have what we've called the roadmap reference, 12 steps, which is what we're primarily going to be looking at today, to guide you through the process of taking a client from the very beginning through to the end. So we start with, is your client potentially eligible to be a crowdsource funding company? A very important question, because unfortunately, every client is not going to be eligible for crowdsource funding. And we will work right through to what happens post-capital raising. What's the next step? If you have any questions as we are going through today, can you please type your question into the computer and upload it, and I will look at the questions every so often, and I will make sure I do answer any questions by the end of the webinar. And then the procedure control form takes you through the whole process of guiding you through the system that we have developed to assist you to be able to be a proactive accounting firm by helping your clients on what I think is the biggest change that's occurred in the financing of small business and medium-sized businesses in Australia in the last 35 years. And those of you who are a bit older will remember that 35 years ago, Section 708 was introduced by Paul Keating as Treasurer for the first time. And it's been the magical section that many of us have utilised ever since to be able to raise capital for proprietary limited companies. And now it's been dramatically added to. 708 is still there and still very handy. The ability to raise up to $2 million from no more than 20 investors in a 12-month period, but it does have restrictions. The 50 shareholder limit is a big restriction on Section 708. And we now have, even though we're playing catch-up, New Zealand, USA, Europe, UK, Canada have all had crowdsource funding for around 6 to 7 years each. We've finally got it, and I think it's going to create a tremendous change to small and medium-sized businesses. The challenge for the accountancy profession is, as a profession, do we want to have ownership of this new business activity for businesses, the majority of whom are clients of small to medium-sized accountancy firms. So therefore, shouldn't you be claiming this space? That's my key question to you today. So we'll now move on and look at the next item. We've developed this new document, which we're calling the Crowdsource Funding Equity Raising Scorecard. And this will give you the current position as to what is happening around Australia with the various intermediaries. Now, we've had to obtain this information by reviewing the intermediaries' websites. We have sent emails to the intermediaries. Some have confirmed these figures, some haven't. There's now around 13 intermediaries. They're not all active yet, as you can see. So this is the summary. If I can get it all, I can't get it all to quite fit on that page. But $23.1 million has been raised as at the 22nd of February. Our close-off date is around the 19th of a month, because it was the 19th of October when history was made that small proprietary companies could start raising capital direct from the public for the first time. So the companies who are very active are Equities, Virtual, Enable Funding, On Market, Bill Folder, Pledge Me, Crowd 88. AgCrowd is going to specialise in the agriculture industry, and they've told me they're going to be starting soon. And I haven't got any updates on what Big Start Capital or Capital Labs are doing, but there are a few other intermediaries who are also in the startup stage. Our system that's available to our subscribers then enables you to click on and get a full summary of the individual deals that each intermediary has been involved in. And I'll just move this along. So we are calculating the average investment. It's well worth looking at column O on the average investment, none of which is anywhere near $10,000, which is the maximum amount that a retail investor can contribute. Column N's the number of investors, 588, 115, 1568. Interesting information. And the same type of information is then supplied for the other intermediaries. We're going to update this each month. This information will be available in the promotional area for another 6 weeks or so. And after that, it's only going to be available to our subscribers, to the ESS BIZTOOLS crowdsource funding product package. Once again, we just go back to the summary, and hopefully we're going to see these figures continue to increase over the coming months. And I think it heralds a great future for crowdsource funding in Australia. So the first step is your client potentially eligible to be a crowdsource funding company? We decided the best way to answer that question, to assist our subscribers to answer it, was to prepare a special form. We call these forms BAS, Business Advisory Service, not that other BAS that you utilise within your taxation work. Above this line, incidentally, this is quite standard in ESS BIZTOOLS material. That's where you can badge the material with your name, logo, address, etc. So the first group of questions is to answer the legal questions. Group turnover under 25 million, asset value under 25 million, not listed on a stock exchange. The company's not on the official list of a financial market, and the company's just not raising the cash to put it into the bank, in other words. We've put there because some people seem to be a bit concerned about this. The age of the company does not count. This is not the same as early stage innovation company when there's a great emphasis on a company being under 3 years of age. And there is no specified industries. So virtually any industry in Australia that you've got the appropriate registrations, if required, to operate in can be a company that wishes to raise capital as a crowdsource funding company. We've then listed 10 characteristics that we think will assist you to be able to zero in on your clients that might meet the requirements. A company that wishes to scale up, and I've defined that as normally a company with over 2 million in turnover. You could have some clients with less turnover than that, of course, that are keen to scale up to become a bigger, more interesting organization. And they will probably require capital if they're going to go on a scaling up process from a 2 million turnover to say a 4 or 5 million turnover in the next 3 years. They're going to need extra funding for things like inventory, debtors, plant and equipment, research and development activities, etc. But they might be a fast growing, ambitious business or a company wanting to expand. Or they might have a CEO with a big, audacious idea. And I've acted for a few of them. And a few people have said that about me over the years. And some of them have worked and some haven't. So you're going to have to be careful with the client that's got the big, audacious idea. Can it be packaged? Can it be summarized? Will the public buy into it? Are there loans to be repaid? Have they got mum and dad bank loans, as the Financial Review and the Australian government's Small Business Ombudsman Kate Carnell calls funding from parents and grandparents? Is there a succession problem where some injection of cash might help? And another big group is companies that have developed a new product, process, or service that you might recall could be eligible for an early stage innovation company, but they have to be small startup businesses. And crowdsource funding is not restricted to small startup businesses. For early stage innovation companies, the company has to be under 3 years of age, income under $200,000, expenditure under $1 million. A very small group of potential entrants. Now, your client might have developed a new product, process, or service and is looking to raise capital because they've realized the cost of introducing a new product, process, service into the market is very expensive. And most people don't think about it when they're inventing something. They think they'll get to the end of the invention and yippee, we'll make a lot of money. Well, unfortunately, unless they are extremely lucky, that is not how it works. They then have to develop distributors. They have to develop promotional material. They have to do a whole range of things, get legal documents prepared, get training manuals prepared. That all costs money. And a lot of these clients will not have money. So crowdsource funding could be a great idea for them. And when you look at the 27 companies that have already raised capital utilizing crowdsource funding, some of them, I think, fit into this category. They've developed a new product or process, and they're now looking to raise capital to assist them to commercialize it. So that's the document that you could utilize to help you identify who might be interested. And step 2 then is your client interested in raising capital? Now, I know not every client that even meets that criteria that we just showed you is going to be interested. But I think it'll be interesting for you if you can invite them to come to a information evening, a seminar run for about 70 minutes, and take them through it. So this is the form we've designed for you to make sure you get all of the information. Because when we get to the offer document, all this information is going to be required. So there's a form there which will help you do this. And we need to get this also for related parties, because remember that turnover limit is on a group basis. And the intermediary, who is the gatekeeper for ASIC, but also the promoter to promote your client's company to the market to raise the capital, will need to see all this documentation, because they've got to satisfy themselves that you have examined whether the company is part of a group, and if it is, what are the details, and just make sure that the aggregate of these figures doesn't exceed the 25 million for turnover or the 25 million for gross assets. So that's the purpose of that form, helping you work your way through to make sure you can answer it. Then we've developed a company eligibility questionnaire, which works through. So, is the company a small proprietary company? Does the company have a minimum of 2 directors? Now, that's the requirement for crowdsource funding. You must have more than 1 director. You've got to have 2. But if the company is also a public company, and a public company can also avail themselves of crowdsource funding, I probably should have said a small public company because they're going to meet that turnover limit, they need to have 3 directors. And the majority of those need to be in Australia. So this questionnaire will take you through these responses. It's the principal place of business in Australia. Have you prepared the related entity summary, asset summary, and so on, so as to make sure that the company does meet the requirements. And there are some slightly different questions in there. If the company is a public company, obviously it cannot be a public listed company. But this is all part of setting the scene. But you can have these sort of discussions with your client so that they can then decide whether they want to be involved in this sort of process. So the form that I've now brought up is our checklist of matters to discuss with directors. And I think it's important that your clients understand that they're going to need to be able to answer a whole range of questions about these matters if they are going to be able to raise capital utilising crowdsourced funding. Because the intermediary is going to want to see all of this information, a significant amount of which will have to be incorporated within the crowdsourced funding offer document. So they need to be able to give you information on a whole range of issues that are summarised in this form. Market position, marketing activities, website. What do they do on social media? Have they produced a capability statement? Are they listed on the ICN capability network, the industry capability network? What's their bank's financing arrangements? Do they have an auditor? They got government grants? Whole background on the company needs to be determined. And at this stage, what we're trying to achieve is that your client understands that if they go down the crowdsourced funding capital raising path, they're going to have to be prepared to disclose to the public at large a whole range of information about their business. And some people will not like that. And if that's the case, unfortunately, they're probably not going to be suitable for crowdsourced funding, because this is basically a public raising of money. The government doesn't call it that, but that's what the effect is. And a lot of information needs to be supplied. And when we get round to projections, who did the market research, that's very important for you as the advisor to know, because if any of that person's information is going to be included in the offer document, the preparer of that market research or any other documentation that's relied upon has to sign a documentation approving the listing or utilization of the report or summary or whatever they want to call it that they've prepared in the final document. Now you can see we've covered a range of matters here. Some of them might not apply to all clients, but I think most of them will. And I think it's very important that they understand at this early stage that these questions are going to be asked. In our system, we're dividing the suggested way you bill for services. So we're putting a package of these types of items together for a small opening fee, somewhere between $1,000 and $2,000, so that the client can go past a free seminar type briefing. And we have some suggestions on some of the articles we've written that you would make available free, including that client matrix, to your client so they can have an initial thought about this, and then take them into the first stage of this, whereby, if you like, they're confronted with the sort of information that they are going to have to make available. So that's helping you explain the process to them. And obviously, we have material right throughout the system to do that. So step 3, is your client ready to proceed? They've had a look at the initial information. Are they ready to proceed? We're going to bring up the company preparation guide. I'm just checking for questions. No one's asked any questions at this stage. So the company preparation guide is fairly detailed, and we are cross-referencing this with the legislation, and in the reference column, these are other articles which we have in the system which will give you greater detail as to what's required. And there's obviously slightly different requirements for a public company that's wanting to avail itself of crowdsourced funding, equity raising, and private companies. So this is a briefing document to make sure your client realizes the maximum they can raise in a 12-month period is $5 million. That can be in more than one offering, separate tranches. So they could go to the market to raise $1 million to start with, and then they spend that. And if later in the 12-month period they believe they could apply for some further capital, they could reissue a further document with the approval of the intermediary, of course, because everything's got to go through the intermediary. So this particular form's bringing to the client's attention some of the requirements of the legislation, which they need to have an appreciation of, that this information has to be answered, has to be summarized within the offer document. And then what we've prepared for you is a draft of the legal requirements of the offer document, an overview, so that you can see what's required to be included. The government's paranoid about risk warnings, and we've summarised the risk warning here. It gets mentioned a couple of times throughout our documentation. That has to be included. If you have a look at any of the intermediaries' websites, some of them have virtually got the risk warning on every page on their websites. There's a lot of information about the offering company, and there is significant information about directors and what is called senior managers within the offering company. The effect of this is if a director or senior manager has ever had a problem with ASIC, you can virtually be assured that is going to have to be disclosed in the offer document. Your clients need to realize this. So if they've got a director who's had some problems in the past, they may need to consider whether that person is still appropriate to be a director in this capital raising, or to make sure that the board, and in particular that director, realizes that all of this history that might be 20 years old needs to be disclosed. So that's the purpose of this document, to make sure that you don't get halfway through the crowdsourced funding offer document and have a client erupt to say, I didn't know all this information had to be disclosed. I think it's very important that you bring it to the client's attention at this stage. You're not doing any work on this. You're basically advising them that this is just not an open opportunity to be able to raise capital. It comes with a cost. And one of those costs is the disclosure of a whole lot of information that some people may not want disclosed. And they also need to realize that this is a public issue. So some information could be obtained by their competitors. They could buy a share, and they will receive all of the information. Some of your clients will not like that. Others will say this is all part of a wealth creation activity, and ultimately we've got a vision that we might like to do a IPO and become a listed public company. Well, it's all going to be disclosed then. So that's a document. It does go on a bit because there's a whole range of issues. Let's move to step 4. I think it's important that your clients understand what the who are going to be the investors. So we've summarized the retail clients overview, but there are some exceptions. So the law basically sets out who a sophisticated investor is under various categories, and then basically finishes by saying, well, if you don't qualify as a sophisticated investor, you must be a retail investor. Now, the big thing about retail investors is there is an absolute limit of an individual shareholding contribution within a 12-month period of $10,000 per company, per shareholder in that 12-month period. And there is a 5 business day cooling off period, during which the potential investor can change their mind, and the intermediary then must refund their money to them and destroy the application forms. And your client, as the company, will never know that one or a dozen people were prepared to put in $10,000 and for some reason, or some other sum of money, and for some reason changed their mind. Now, some people claim this is a way that competitors could gain information. You need to think about this as advisors and be ready to answer that question. And the honest answer is that could happen. And that's one of the risks that your clients need, I think, to know now. I'd much rather deal with them now for a rather small fee and take them through this process than get halfway through the offer document, which is going to be a higher fee, and have problems with clients saying, we didn't know we had to disclose all of this information. So this is a summary of the investors, just putting a bit more information in there. You can make some of this information available to clients to back up what you're saying to them as to what this process is. And the other key point that you should be emphasizing to your clients, if they want to go into crowdsource funding, they cannot accept any share contributions, even from their favorite aunt who wants to put in $200 to their favorite nephew or niece's company. They can't do that. The favorite aunt must log on to the website of the intermediary and indicate that they wish to invest in ABC Proprietary Limited, and they will then have to acknowledge that they have read the investment warning, because that's the law, and the intermediaries have to report back to ASIC after each capital raise that that law, and indeed all the laws, has been followed as part of the capital raising process. So your client needs to realize that he just can't take $200 off his mate or his favorite aunt or whoever and say, that's all right, I'll go and fix up your shareholding. That potential investor has to do that direct themselves so that they get the investment warning. So there's also some notes on checklists for retail clients and general investor protection, which is part of our system. Step and the crowdsource funding offer document for retail investors. I then want to move on to the role of the intermediary, because I think this is very important. And in this package that we're presenting, or suggested package, how you undertake all of this with your client, we will be introducing some of the material on the intermediaries very early, so that there's, again, no misunderstanding from your client that they've got to deal with an intermediary. Now, some accountants think that the intermediaries will go through this whole process of preparing the offer document with the client. As I see it, the legislation doesn't say that, and the intermediaries basically are not doing it, but they are there to assist in what the final document looks like, because they've got two roles, two very important roles. One is to act as the gatekeeper. That's what Mr. Morrison, when he was the treasurer, called their role, the gatekeeper on behalf of ASIC. But the second role is they are the promoter of this share raising. They have each got 22, and I found out yesterday, one claims that they've got 620,000 potential investors on their books. Most of them seem to be between 20 and 40,000. One has got 620,000. Now, they are going to promote your client to their database of potential investors. So they are wearing a promoter's hat as well as a bureaucratic gatekeeper hat. So they have some different roles to play, and they've got a lot of power. So we believe it's important that your client has a clear understanding at this early stage of the process what this role is. I was just checking to see if we got any questions. We haven't got any questions. I hope that means that I'm answering all your questions as we're going through. So we have a document here which gives you a clear summary. You can hand this to your client of what the intermediary's role is. So they have to enforce the cooling off period. They're the ones that have got the money. They know who's just paid to them $7,000. They cannot tell the directors anything until that 5 days is up. And in actual practice, I doubt whether they would tell the directors anything until the minimum subscription's been raised. And we'll talk about that in a bit more later on. And they must make sure that the intermediary has read the offer documents risk warnings. And there's another summary of them there, that it is risky. And if you read the risk warnings, you probably would never invest. But that's what the Parliament, in its wisdom, included in this legislation. It's the intermediary's responsibility to reject any share application that has not gone through the process that is stipulated in the legislation, which is what is summarised in these notes and basically what I just said to you. The intermediary must also operate a communications facility. And this is one of the areas that I've been very delighted to see, because when I read the legislation and started writing this sort of material for accountants to use, it was all very dry. And I thought, oh, this is not going to be a very exciting process. But please go on and have a look at some of the websites. I think they are exciting. They have tried to make it exciting. So under the communications facility, there's videos, there's webinars, and the intermediaries are cooperating with the companies for public type presentations. The key thing is that the investment warnings are given. So that's a bit more liberal than what I originally envisaged when I read the legislation. And I think that's good, because this is capital raising. And the public needs to be able to be informed. And there's a lot of information starting to be disclosed within some of the intermediaries' websites. So that's a summary there. Oh, the other key issue that everyone needs to understand is that the intermediaries can charge whatever fee they would like to charge your client. It's obviously up to your client to negotiate. So there's no stipulated percentage contained in the legislation. All that the legislation says that the intermediary can charge for a cash payment, normally calculated on a percentage of the capital raised, or they can charge on a share allocation basis. So they say, we will take X percentage of the share capital of the company, you allocate that to us, or a mixture of both. Now, the figures that I've seen vary from 4% to 8%. The 4% was on a $4 million attempted capital raise, so $160,000 in fees. The majority seem to be in the 6 to 8%, with probably a heavier weighting to 6% of the capital raise. Most of the intermediaries are charging an upfront type fee, ranging from around $1,500 to $10,000. So this will all come out in the negotiations with the intermediary. The crowdsource funding intermediary document is just a bit more information on what we just talked about, and just summarizes a bit more, and is a document that you could hand to your clients to make them fully aware of how this process works. So if you like, the intermediary's role is probably a bit similar to some extent to what happens with the stock exchange. If you want to list and do an IPO, you've got to submit your documentation not only to ASIC, but also to the stock exchange. And they go through and make sure that their listing rules have all been abided by. The intermediaries have got to make sure that the law has been abided by. And the key group that this legislation is concerned about is not your client's company, but the investors. So you need to make sure your client understands that. And then they should get on quite well in this process. The next document I want to show you is the intermediaries that have been appointed by ASIC. Now, they've appointed a few more, and unfortunately, they don't put out news releases anymore when they appoint them, or if they do, they don't name who they've just appointed. But this is a list that we've prepared at this stage, and some of these are the companies that have already started to raise money, and our clients obviously have this, and we are currently preparing some interviews with the key people in these organizations, which we're going to be making available to our subscribers. Some of these intermediaries are specializing in particular industry components. AgCrowd is primarily for agricultural type activities and energy related activities. Capital Labs, I think you'll find, is in the health and scientific type markets. Enable Funding was originally known as ASOB, Australian Small Scale Offer Board, and has been operating for about 10 years, raising capital as Section 708 companies. They seem to be opening opportunities for all types of business. Equities are also operating in New Zealand, so they've had the benefit of the New Zealand experience, and they seem to be open for all types of companies. Bill Folder seem to have a preference for not getting paid. That's wonderful, isn't it? But they want equity. So they've set up an investment group that's really funding them in their operations because they're obtaining shares in the companies. So they're looking very closely when they do their due diligence to make sure that their group of investors who are backing them are going to be happy with the investment choice that they have made. On market, I'm not very familiar with what their activities are. Birchall's in Melbourne, and they seem to have had a pretty big start. Big Start Capital in Perth, but I really don't know anything about them. So that's giving you some sort of idea of who the intermediaries are. There are currently 13. And we have the stages of a crowdsource funding offer, which obviously takes you through the process. And what's important for your client to realize is that our suggestion is that initially you make contact with as many of the intermediaries as you wish. The majority of them are in Sydney, but there's now intermediaries on the Gold Coast, Sydney, Melbourne, Adelaide, and Perth. And the couple that I haven't properly located yet could be somewhere else, but that's where the ones that I know of are. Your client, I think, should be talking to 2 or 3 at least of the intermediaries, understanding what they're going to do for you and how they are going about raising the capital. How many people do they have in their databases of potential investors? Do they have any particular expertise? Have they got investors who might have a preference for your type of industry? What's their fee going to be? Very important question. And is your clients, directors and senior managers confident that this intermediary that they're talking to today has got some empathy, got some understanding, got some enthusiasm? Because the company's going to place a whole stack of its future into the hands of the intermediary they choose. So they should talk to a number, and we have a form here to help with that evaluation. We call it the intermediary checklist. So this is all going to take a bit of time, and it's very important. And it can start, a week or so after you've started on this process. You start talking to the intermediaries. You won't have prepared the offer document at that stage, but you'll have an opportunity then to get some feedback from the intermediary your client finally chooses to make sure the offer document fits the sort of style that they're interested in, because they'll know the style that their investors, their people on their database are interested in. So questions to be asked. What are they going to do? How are they going to promote? How are they going to calculate their fees? And so on. Preparing the crowdsourced funding offer document and supporting document, making a CSF offer. So all we've done up to this stage is get your client's head around what all this is about. And then we've got to go through the process. So we've got some notes here of what's involved in the crowdsourced funding offer document. If you want to give it another name, call it a prospectus. It's got some more specific information than what a lot of prospectuses have, but you know what public company prospectuses are like. And the documentation is summarized so that you have got a good understanding, so you can show this to the client. We have drafted a template on the crowdsourced funding offer document, which is going to follow in a moment. This is just giving some more information. Now, bear in mind that the offer can only be on the intermediary's website for 3 months. It can be for a lesser period. And we're now going through the key sections that the law says you've got to have. The risk warnings, information about the company, details about directors and senior managers. I referred to earlier about these past offences or misdemeanors or whatever you want to call them need to be disclosed. The offer document, what's the deal? What are you offering? It needs to be spelled out. And then you need a summary of investor rights. And then we need the other promotional information, a bit more about what this company's all about. That was just the legal side of it all. We've developed what we call the crowdsourced funding offer document working papers to make sure that you have got a trail as to how all this was put together, a bit like an audit. And this will help you work your way through to make sure everything's been answered. First of all, to check that they're eligible, so that you've got this file that you're able to supply to the intermediary, because the intermediary will be asking a whole range of questions. If you turn up with this completed, I think you'll answer the intermediary's questions. Okay. And we've got there the details you've got to supply, the reference back to our more detailed note on a particular subject, so that you're clear with why it's been supplied. So hopefully that helps you. We've also included a corporate due diligence checklist. This is mainly included, this is one of our other documents within the ESS BIZTOOLS package. So it's got a paper number on it. It's for when someone wishes to sell, do something with a company. So it's really a pre-due diligence checklist document. So making sure that the company's got its house in order before you go inviting intermediaries or other people to look at it. Now, this is not what this document was designed for, but we've included it in here to assist with a company that might have been operating for any number of years. So it's definitely not a startup, but it's already got shareholders. So these will be bear in mind, you could have 3 groups of shareholders in crowdsourced funding. You will have a group of the original shareholders who are subject to the 50 shareholder limit. These are people that come in as the founders or through Section 708. So they are a separate group. Then you've got employee shareholders because they're a separate group. Then you're going to have crowdsourced funding shareholders, and you need up to 3 share registers maintained. But this company may have already entered into various performance agreements or share option agreements. This will all need to be disclosed. The intermediary will be looking for that. So we are utilising this document. There may be shareholders agreements, and so it goes on. The intermediary may well want to look at the minute book of the company of directors' meetings and make sure that how this company is operating. Is there an auditor already? Is there an audit committee? These types of questions. Are they up to date with everything going to ASIC? Who's the management team? And so on. So you would get that if you subscribe to our package. It's very important also that there's a register of consents kept. So this is step 7 as part of the preparing the offer document, because the consents have got to be kept for 6 years. Can I be corrected? 6 or 7 years, I'll say. It's gone out of my mind. I'm just checking to see whether we've got any questions. We've still got no questions. Please don't hold back if you have questions. But if you think of a question after this webinar, you can send me an email and we will get back to you. So we've designed a consent form so that you've filed the consents, because I mentioned earlier that anyone that's written anything that's then included in the crowdsourced funding offer document has to give you consent, has to give the company consent that they can use that information. And one of the key things is that they have not withdrawn that consent. So we've designed a register which will help you with every component that we can think of that you might be getting reports for, so that that is not just left to chance. The legislation says 6 years. It's got to be maintained. There's obviously a reason for that. And obviously that gets back if there's any subsequent inquiry into what happened, and you want to make sure that that can be produced. And in our system, there's also directors' declarations. Read the documents, because the directors have got to sign off that they're happy with the various documents that have been submitted. So this is a document we're prepared that you could then get the directors to sign that they're happy on these documents. And obviously that one may have to be expanded to suit a particular requirement. With any of these documents, you can edit them if you are a subscriber, obviously, to suit the particular requirements. The legislation, you might remember Section 4 looked at the risk areas that goes into the office document. We've designed a form which will assist you to at least remember that these risks need to be documented and supported, what they are, and you then sign off as the directors that that is your risk documentation. So we've gone through all this process. You've obviously briefed the client in the first instance. The client then found out all about intermediaries. We've made sure they understand what's going to be included in the offer document, and we're now ready to forward the offer document to the intermediary. So it's as simple as that. There would have been dialogue with the intermediary during this process. There will be dialogue as to what the printed version of the offer document looks like, and the intermediaries all want that in a certain format because they want it to look attractive if they're going to send it to some of their potential investors. And your client will need it looking nice so they can hand out at any investment presentations that they're holding. Incidentally, those presentations basically require the intermediary to be present. That's what the intermediaries are saying. So I imagine all of them are saying that. So you then forward the document to the intermediary. We then, in step 9, go live on the intermediary's website. So that's when the communications facility really commences. The communication facility that the legislation really concentrates on is that for the 90 days or whatever lesser period that the offer document sits on the intermediary's website, the directors and senior managers must be available on a daily basis to answer any questions that have been sent to the intermediary. Now, some of the intermediaries are publishing these dialogues, so it's interesting. So it's all out there in the public arena. If you go onto their sites, you can see them. And in the main, the company directors or senior managers have answered within 24 hours. Some have taken a bit longer, and I've noticed some terse comments from some of the would-be investors that it's taken you 3 days to get back to me, which were not appreciated by that particular person who was making an inquiry. And some of them are fairly complicated type questions. So that facility is working because that's part of this process. So on top of the webinars and videos that are contained on the intermediaries' websites, we have this very important communications facility. Your client needs to understand this. It's mentioned earlier in the material where we said there was material there dealing with intermediaries. Obviously, I'm trying to condense a whole range of information into a 1-hour overview for you. Now, if the crowdsourced funding document is found to be defective, now what the law envisages is that the intermediaries accepted the document, it's been placed onto the website of the intermediary, the offer period is commenced, and then someone finds a mistake. Well, there's certain processes that have to be then implemented, and these are summarized. And again, I think it's very important that you make sure before you really get started on this project that your client understands what this process is. In some cases, a deficiency can lead to the suspension of the total capital raising process. In others, the intermediary might give the company a day or 2 days to correct something, and then the process can continue. So it's important that you've worked your way through this document and made sure your client understands that. It also, I think, really highlights what's got to happen during the preparation process, so as to make sure there's going to be no deficiencies found in the overall document. We then have a form on closing the crowdsourced funding offer document. Now, this is a bit of an anticlimax. The 90 days is up. It could be 30 days, but I would never recommend anyone go to the market for only 30 days. The 90 days is up. At least the minimum subscription has been raised. The intermediary will send a email to the client saying your 90-day period is up. You have raised 780,000. Your minimum subscription was 500,000, but your maximum subscription that you mentioned was 1.2 million. So we can keep the 780 grand. We have now transferred the net amount, obviously less the intermediary's fee, direct to the nominated bank account. And here's the list of the 400 new shareholders that you have. Good luck, goodbye. And that's the end of the intermediary's arrangement with that company unless the company directors want to go back to the intermediary to reappoint them for a further capital raising tranche later that 12-month period or maybe the following year. So the company is then responsible for preparing the share certificates, to preparing the share register for the crowdsource funding shareholders within the company. So that's the post-capital raising. Your action plan. You've come to this webinar today, and I know some of you have been following us through this webinar series, and that's great. I really believe now's the time for action. So if you're interested in joining your clients, if so, I think you need to start. You could subscribe to our material, and we have training material that's part of the package that you would be getting from us. You would need to identify the clients who could be interested, and that's why we've developed the eligibility matrix, and that's provided within the system so you can use it. You could market to your clients the marketing, you could utilize the marketing material to be able to market to your clients. So if we go back into the procedure control form, we had a section B which summarizes the marketing material. So you've got the eligibility matrix, there's a seminar, there's an article that you could place on your website, there's another article you could send to clients or prospects, there's a news release you could send to your local media. There's a seminar that we've prepared all of the material for, all you're going to do is read it and present it. So all that material is included, and there's some suggestions on social media contained within there as well. So that information's been provided to assist you to be able to communicate to your clients that you are very interested in all this. And we also supply you with a free mentoring webinar once you've subscribed to ESS BIZTOOLS, so we can make sure that you're on the right path. You are going in the right direction. I'm just checking questions again. I don't believe we're going to get through a webinar like this and not have questions, but anyhow, I hope I've answered all of your questions. You could conduct a webinar or seminar then for your clients to identify who are really interested. This is part of your action plan that I'm suggesting for you. And then you could organize a one-on-one meeting with those clients and find out whether they are interested or they're not interested. And part of our material gives you some free handouts to give to them to help them make that decision. But then for the ones that have indicated that they are interested, we suggest that you move into the proposal to them, discuss the proposal with your clients, and then you can get started on developing a new business advisory services component for your firm. And I think the developing of business advisory service components for accountancy businesses is very important in 2019. So to get started, you could subscribe to ESS BIZTOOLS. You can subscribe to the crowdsource funding package for $999, including GST, and you'll get access to everything I've shown you today. Or you could subscribe to our gold package, which includes the crowdsource funding equity package for a monthly subscription. It ends up at $3,141, or you could make a upfront cash payment of $2,970. So obviously it's a little bit cheaper, and both of those figures include GST. If you wish to subscribe, please go to our website, and we're going to send you these PowerPoint slides. I probably should have told you that earlier, but we're sending those to you, essbiztools.com.au, and click on crowdsource funding, or go to the ESS BIZTOOLS Gold package. And you can click on either the upfront discounted payment or the monthly payments for the Gold package. Questions? My last check on questions. I haven't got any. So I hope that we have answered them. If you think of any questions later on, you could send me an email, peter@essbiztools.com.au, or telephone me on 1800 232 088. Thank you for participating in this webinar today. I do look forward to you joining us as a member so that you can offer your clients a very proactive service to assist them to take advantage of the biggest finance arrangement change for small and medium-sized businesses in Australia in the last 35 years. Have a great day. Goodbye.